Hey all, Mike back here with another Stock Strategy Explained, and today we're going to be talking about the Doordash IPO. For those of you who didn't know, Doordash is going public this week, and today we're going to be taking a look at their IPO and their S-1 to see if they're worth a buy. Stay tuned for the end for my final recommendation on Doordash. Make sure you subscribe down below for future updates on stock analysis and even IPO updates. And just as a quick disclaimer, before we begin, this is not legal, tax, financial, or investment advice. Make sure you do your own research before you do any sort of investments. I am not a financial advisor. And with that, let's get right into Doordash. So first up, let's actually take a look at their IPO and see what juicy information holds. Doordash is actually aiming for a price per share of around $75 to $85. And this could actually give Doordash a valuation between $23 billion and $27 billion. There are some reports that say they could be aiming for a $90 to $95 per share, which would give it up to almost a $37 billion valuation. Just for a little bit of a comparison, Uber IPO'd at about an $82 billion valuation, Lyft IPO'd at about a $24 billion valuation. Something else that they really highlight in their S-1 is their revenue. Their revenue from 2018 to 2019 has soared over 200%. So it has a huge amount of growth from just 2018 to 2019. And that was before the COVID-19 pandemic. So more recently, in the first 9 months of 2019, Doordash made about $580 million. However, if you compare that to 2020 in the first 9 months of 2020, they made $1.9 billion. That's almost a 220% increase in revenue growth. So you can see the pandemic is really helping them right now. So for a little bit of a comparison, Uber Eats made about $3.5 billion in the first 9 months of the year, and they saw about 96% growth year over year. So Doordash is definitely growing faster. The other thing is Uber Eats is international, whereas Doordash is mainly based in the US. The other thing to add here is Doordash has over 50% of the US delivery market share, which is huge. They are definitely the #1 player in the US. But we can also see Uber Eats is growing. That means the overall delivery industry is growing very, very quickly, as we can see. So just a quick recap, Doordash is just a food delivery app. So as a consumer, I can quickly order some food and it'll get delivered right to me. It's another way for restaurants to make money. It's another source of revenue for them. And for drivers, it's another way for them to make money when they're not delivering passengers or delivering other things. And the main thing here is everyone's happy. Customers get their food delivered in a safe and reliable way. Restaurants get another way to sell all of their products and their food. And drivers get another way to make some money. And these three segments, customers, merchants, and delivery drivers, are actually very important for Doordash's overall strategy, which we'll take a look at. So the best way to think about Doordash's strategy in these three audiences is their flywheel diagram. This is basically a high level of how they think their strategy is going to work and really build them a moat for the future against competitors like Uber Eats and Grubhub. Their overall strategy, which is very much based off of product and marketing strategy, is to really aggregate demand from customers. We can actually see a great parallel in Amazon. Right now, they've aggregated e-commerce demand. When you want to buy something, for example, a light bulb or some groceries, you go to Amazon.com. Doordash wants to be something very similar, where when you think of food, either pickup or delivery, you go to Doordash's app. And you can see that really well in how they're trying to aggregate demand by the amount of coupons and marketing they're doing. You've probably gotten 20% off, $5 off from Doordash. And that's a way for you to keep on coming back to Doordash, help make sure Doordash is very top of mind when you think of food delivery. And again, Doordash says they hold about 50% of the US delivery market, and they're clearly the #1 player in the delivery food space. So that's very important for them to aggregate demand, and they really want to capture a lot more of that market. The second big part of their strategy is aggregating restaurants, right? The more restaurants they have, the more selection there are for customers, the more customers can actually find the food that they want, and the more that they'll keep on coming back. Again, this will have a natural network effect. If customers can find the food and restaurants they want, they're going to think very highly of both Doordash and the restaurant, which is a positive thing for both restaurants and customers. Then the last piece of the puzzle are naturally delivery drivers. The more delivery drivers they have, the faster you can get your food, the cheaper you can also get your food because you have more delivery drivers competing for the same amount of deliveries. And on top of that, Doordash is really hoping that with more delivery drivers and with more customers, they can actually lump more deliveries into one delivery driver order. So you can imagine if I'm ordering pizza and my next door neighbor is ordering pizza, one delivery driver has to pick up both orders, saving a lot of money and making it a lot more efficient for both me and my neighbor and the delivery driver and DoorDash. It's a win-win-win, everybody's happy. However, there are a few weaknesses that I'll touch on in a bit and why this product strategy might actually break down. So next, let's quickly take a look at their financials. So the main story here with DoorDash is how fast they're growing and scaling their revenue. We can see in 2018, they made about 291 million, and in 2019, they made about 885 million. If we just take a look at the first 9 months of 2020, because again, this year is not over yet, they made about $1.9 billion. So they've already grown way faster and way bigger than they have in 2019, and that's huge, especially with the pandemic. So actually just recently in the last quarter, DoorDash just reported a positive 5% margin on their revenue, which is actually very important for the food delivery space. We actually don't see very much positive margins just yet from the food delivery space, and for DoorDash to actually eke that out is a positive thing when you compare them to Uber Eats or Grubhub or Caviar. So looking at their multiples, if they have about a $25 billion valuation, they'll have about a 10x market cap to revenue multiple, which is actually a little bit on the higher side when you compare it to some of the companies like Google and other tech stocks that are very strong growth and also making a positive income. However, they do have insane revenue growth, over 200% year over year, as you can see, and they're a huge company growing on the scale of billions of dollars. So I think this revenue multiple could make sense if you truly believe that the food delivery space will be huge and DoorDash will capture a huge portion of the market. And I think this is definitely worth an interesting look. However, what I really want to take a look at are their product risks. So the first question that naturally comes to mind is how sustainable is this revenue, especially with the pandemic? We know that right now people are a little scared to go eat at restaurants and delivery is definitely killing it. So the real question here is, after the pandemic ends, will we still see a large amount of delivery orders or will we see a decline in delivery orders, which would naturally hurt DoorDash? There are a few estimates from a few analysts saying that in 2020 and 2021, there'll be about a 200% growth, 56% growth in the year after that, and then 21% growth in the year after that. So there are some analysts saying that there will be a natural slowdown and we can't expect 200% revenue increases year after year after year. So that's, in my mind, definitely a product risk to look out for. The other thing to consider for DoorDash is, do they really have a moat when it comes to their strategy? Again, they're really focused on customers, on merchants, and on delivery drivers, but how easy is it for a customer to switch apps? Let's say I don't want to use DoorDash anymore and Uber Eats gives me a better deal. It's pretty easy for me to open up a different app on my phone and make a different delivery order. There's really nothing locking me in as a customer to DoorDash's platform or to Uber Eats platforms or to any other platform for that matter. Same thing with delivery drivers. They go where the money goes and they go where their orders go. So if DoorDash doesn't have that many orders, or if Uber Eats or Caviar or Grubhub can pay more, I could see delivery drivers actually ditching DoorDash and going to a different platform. So the main risk that I see here is there's really nothing locking customers or restaurants or delivery drivers into the DoorDash platform. So the other thing to note here for delivery drivers is autonomous vehicles and self-driving and self-delivering robots. If these robots actually take over from delivery drivers, that could potentially hurt DoorDash. Or if DoorDash decides to invest in those, that could potentially be a big plus for DoorDash. So it's both a risk and potentially a reward for DoorDash if they play it right. And the other thing to consider here is they have very minimal opportunities to expand internationally. Like I noted before earlier, Uber Eats is actually very international. Even though Uber Eats isn't number one in the US, they still have a large presence all across the world, both for ride sharing and for delivery. As far as I know, DoorDash is really only big in the US and they haven't really made any international expansions just yet, which could hurt their long-term growth prospects. So my recommendation here is to actually hold off on the IPO a little bit. We want to take a look at what happens after the pandemic, if delivery is still a huge trend, and if DoorDash can keep their number one position, and if they can still have positive margins post-pandemic. Unless you have a very strong conviction that even past the pandemic, food delivery will still be huge and there's still going to be a large opportunity to make money for both restaurants and delivery drivers. So with that, we wrap up DoorDash's IPO. Let me know down in the comments below, what do you think? Are you going to buy DoorDash during their IPO? Make sure you like and make sure you subscribe for more future updates on IPOs and other types of stock analysis. And remember, make sure you understand a company's product strategy before you do any sort of investing. And most of all, make sure you make money. Peace.